Wow, what a Monday morning we have starting off for us. What's top of mind? Because there's a lot to pick from, really.
Top of mind is, as you look at this market, this coronavirus is certainly a serious situation. But also, in terms of the market itself, Courtney, conditions were kind of right for some sort of sell-off to occur. If you looked at how overextended the market was, if you look at how far above the 200-day moving average we are from a technical perspective, all the conditions were right to have some sort of reason to take some profits in this market. And that's what I think the coronavirus is at this point in time, just an excuse to take some profits. The longer-term trend, it's still intact. The economy, it's still doing fine. Our year-end objective, Courtney, is still 3,600. I think we can still get there. But in the near term, we need to see some sort of consolidation of backing and filling.
Excuse was almost exactly the word I was going to use when I was going to ask you if that's what this feels like it is because of the stretched valuations for some of these big names. And if we look at past outbreaks, SARS is the one that comes to mind for most people. That was in 2003, and in those moments we were coming out of a bear market, potentially a bit more fragile than we are here. So this just may be an opportunity, not to make light of the seriousness of this disease.
Absolutely, I 100% agree with that. And when we wrote up our monthly piece, Courtney, we actually titled it, "I'll Melt With You." A little play on the modern English song, because the market was clearly melting up. And as we were looking at this period of time here, and also looking at what we were seeing in January of 2018, we were seeing a lot of stocks that were literally going parabolic on the charts. We were looking at Caterpillar. We were looking at companies such as 3M, Boeing. They're all going parabolic. And as a person that looks at charts, we know how those kind of charts end, and that's badly. Fast forward to today, take a look at Apple. Great company, nothing wrong with the company. But the chart has gone basically straight up. So we do need to see some profit taking and a resetting of expectations as it's starting to get ahead of itself.
So profit taking, do you think that will happen in light of many of those companies reporting earnings? Apple, of course, is reporting, as well as many of those others you mentioned with these parabolic stock charts.
There's a lot of expectations built into these companies, the 150 plus type companies that are reporting this week. There need to be some pretty good results, and we need to see some upside surprise to those numbers to keep this moving. Earnings haven't been growing quite as quickly as what I think a lot of investors have been looking for. The expectations are a negative about 1.9% growth here for Q4, and we had a negative Q3 earnings season too. So 2 quarters in a row of negative earnings growth is not going to set up well for the tape, and again, supports the rationale for getting a setback and a little bit of a correction in this tape because it's just too far ahead of itself. And again, an excuse at this point in time to take some money off the table.
I was going to say, I mean, it sounds like if you're still looking at 3,600, this is perhaps temporary.
Correct.
Where would you be looking for pockets of opportunity here then, if it seems that prices fall a little bit and there might be a moment to get in?
Sure. So what I'll be looking for is, again, if you take a company like Apple, if you see a simple correction that takes the stock back 5 to 10%, that's a buying opportunity. Other stocks that I like stocks like GE. They've been down, washed out. They're starting to show an improving chart. I'm a buyer of that. Stocks like Microsoft, still very nice uptrend intact, but again, it could correct back to the 50 or 200-day moving average. Better entry point for some of these extended stocks. Even stocks like Philip Morris have reversed longer-term downtrends. I like stocks like that. I'd also just mention we upgraded the energy sector from an underweight back to a neutral just this last month. We think expectations there are extremely low. Valuation levels have been reset to levels we have not seen since basically 99, 2000. And so while some of these tech names are extended and these other energy names look fairly well priced, well, discounting a lot of bad news at this point in time, it has a little bit of a feeling to me like 99, where you saw profit taking in tech, money came into energy, and you saw this sort of mini rotation. I don't think it's going to be to that extreme, but I think there's better value there in the energy space, and people are giving it credit for right now.